This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and it's finally Friday. I think I'm looking forward to spending some time this weekend with the family and then locking in for next week. Because I think next week is really going to be the start of the end. The start of the final blow off top. So pretty wild times. I got a couple of announcements. First of all, if you weren't able to make the live stream yesterday, okay, we have saved 5 Camel Indicator discount codes for the people that are coming back to watch this on the replay crew. So all you have to do is comment Indicator on yesterday's live stream video, and on Monday during the regular show I will pick 5 people's names and give away some free Indicator stuff. Okay, so like I said, for the people that weren't able to make the live stream, don't worry, we got you covered as well. Tomorrow's deep dive video may either be a shallow dive or not exist at all, and that's because I've got some family stuff to attend. I may be able to do it on Sunday if I'm not able to do it tomorrow. I'm going to try and wake up extra early and get it done before I go off on my adventures. But if for some reason there's no deep dive video tomorrow, that'll be why. It's because I'm away doing family stuff. And if you're a level 3 member, normally you'd get the members video on Saturday. That may or may not be there on Saturday, or if it's not there on Saturday, it will be there Sunday for you guys. So just a slight change of schedule. But I think so long as I can get up a little bit early, deep dive can be done and the members vid can be done on Sunday and everything will be a-okay. And then, like I said, Monday we'll draw 5 winners. Might give away some merch as well, just to be extra generous. I did actually give away over 2.5 grand's worth of stuff yesterday. I gave away like well over 100 PDFs. So I think it's a pretty successful giveaway. Thank you again to everyone that supported the channel and everyone that could attend the live stream. Getting into today's episode, okay, I wanted to quickly touch on this again because we know that the government has shut down, and this time is slightly different because the BLS plans not to release the economic data during this government shutdown. Which, if you're like me and everything is a conspiracy and your tinfoil hat's on too tight, you know, you look at this stuff and you go, well damn, right? And of course, they were telling us in CNBC, as we covered a couple of videos ago, that we should therefore not pay too much attention to the BLS data and instead look to ADP non-farm payroll for guidance, okay? But the guidance here is pretty terrible because ADP non-farm falls by 32,000, okay, when they were estimated plus 52,000. So to me, I mean, this is just recessionary. This is the beginning of the end, right? This is the beginning of the end of the economic cycle. This is the beginning of the end of this 4-decade-long bull market. And whilst we can still be bullish and go up for a little while longer in the likes of stocks, gold, and Bitcoin, those 4-year cycle lows are hard-coded in the universe, and they are due next year. So we are now on borrowed time, and this whole call of eventually heading into a recession, I mean, I don't think I need to pivot from here. I see a bunch of other people squirming, right? A bunch of other people are, maybe it's a 5-year cycle, maybe it's this, maybe it's ISM, right? But as I said before, I don't think I need to change my idea. I think everyone else needs a new idea. My idea seems to be intact. I believe this is just confirming my idea. And so until such time as something changes, then we're going to stand with this idea that we are in the final leg. We are going to go a little bit higher for a little bit longer, probably see a major top sometime this year. In the worst case scenario, I think we could maybe get to January or February next year. And then I think we'll see a major top and head for those major 4-year cycle lows. This will all be accompanied by a recession, a bear market, and a short period of asset price deflation. And until something changes, right, until inflation starts skyrocketing above 3%, until these jobs suddenly get better, I'm going to continue to stand with that idea. Over in the world of Bitcoin, the rest of these tabs are on Bitcoin, and then we'll look at a few charts and live positions as always. Bitcoin, according to Bob, is off to a very good start this week, and I have to agree. Did we bottom? Well, confirmation of a new weekly cycle are stacking up. We want to see the weekly close out strong though, so we're not looking for any top heavy wicks here. So long as we've got a big green candle with very small or non-existent wicks to the upside, then happy days, all looking good. He says we're currently sitting at the highest weekly close ever. It would be nice to end the week that way, and that would pretty much confirm that here we go. We're in that final leg to the upside. And timing is everything because the McRib is back. And if you know, right? Bitcoin historically does a 2x after the McRib returns at McDonald's. So as silly as this sounds, it's actually true, okay? You can see here, every time the McRib shows up, Bitcoin does a 2x. 2x from here would be about 250k, wouldn't it? 240. I don't think anyone will be complaining with that. And again, since we know we've got this weekly cycle likely behind us now, since the indicator once again managed to detect the momentum in the market when no one else could see it, including me, as that weekly cycle is now tucked behind us and we are getting ready for the final leg into the ultimate top, notice how the narratives are starting to appear, right? We've got, just as we suspected, countries starting to waive capital gains tax for Bitcoin and crypto trading. I expect this to probably happen in some larger places like perhaps the UK or the US or Europe, something like that, okay? It doesn't even have to go through, it probably just has to convince the market participants it's going to go through, and that will be a narrative to help drive this final move to the top. At the same time, the current US president is talking about giving a $1,000 to $2,000 stimulus check for all taxpayers funded by the tariff revenue. This is kind of late stage cycle stuff. This is the kind of thing that I didn't see this coming personally, but I'm not surprised, right? Because it's just so easy to point at stuff like this and say, here's a fun fact. If you took your $1,400 or $1,200 stimulus check in 2020, it would now be worth 21K. Right? It's very easy to point at this and say, well, if you'd have just aped it into Bitcoin last time round, you'd be a lot better off. And so this, again, will be another narrative to say, everyone take your stimulus checks and blow it off into the top of Bitcoin, right? Again, all these types of narratives, we've been kind of expecting to see this kind of thing show up. And that's for the simple reason we are very late stage cycle. To demonstrate how late stage we are officially in month 35 now, okay? And notice how the bull runs for the prior two cycles lasted exactly 35 months. Meanwhile, the one before lasted 37 months. So Bob and I are both in this camp that we're going to get a top somewhere between month 35 and month 37, which would be October, November, or December of this year. There's always an outside chance it can run to Q1 of next year, but I just don't think that's the smart bet personally. As ever, I'm open to being proven wrong, but I just think given how far some of these crypto mining stocks are moving, given how many months we are into this 4-year cycle for Bitcoin, given also it's not even a real 4-year cycle, okay? If you actually look at it, 35 plus 12 is 47 months. So it's actually a 47-month cycle. It's actually not a real 4-year cycle. It's just we all call it the 4-year cycle. But that's super important to understand, because if we end up using another 2 months and top in December of this year, then there's even less time to start to head down for that 4-year cycle low, which means it's probably going to be a much sharper correction than many people are looking for. And of course, if we were to run into Q1 of next year, let's say February or March of next year, then the drop is going to have to be extremely violent and sudden to the downside. Because remember, a rule of cycle theory is the more stretched the cycle gets, the more drastic the drop. And this is one of the reasons the C19 plunge was so violent, because we were hyperextended in terms of time, okay? And my wife will vouch for me here. I was very depressed in this neighborhood because I was thinking that World War III was coming. I kept walking around the house moping, and she was like, what's the matter? And I was like, it's in the charts, right? There's going to be a massive world war. Something horrific is about to happen. And I was coming to this conclusion because of how late in this 4-year cycle we were. The later we go, the more violent the drop has to be. And as crazy as it sounds, I was relieved when it was just a pandemic, okay? But this is the power of cycles, right? The later we go, the more violent the drop is. This is why this was actually very predictable to cycle traders. I think it was only really the cycle traders that saw this coming, because the later you go, the more violent the drop is. So, you know, people saying things like, oh, Q1 top of next year, it's going to run till March. I even see some people calling for a Q2 top next year. And if that's the case, the drop will be excruciatingly violent, excruciatingly fast. And all against a backdrop of people saying that we've got diminishing volatility, right? The bear markets are getting smaller and smaller. I don't think that's going to be the case this time around, but time will tell. Anyway, I'm not even going to entertain getting tops into 2026 until at least we get into 2026 without seeing a top. For now, though, I think 1 or 2 big monthly candles, and that will be plenty for me to say, that's it, it's over, and I'm ready to exit my positions. But as ever, you can do you, and I'm going to keep doing me. As for the live positions, there's so much strength in the stock market. By the way, this is another reason I don't think we are going to get into Q1 of next year. This is another reason I think the top is coming this year, is because this blow off top in the stock market, and it is already a parabolic blow off top here, okay, is so violent and so strong, and the pullbacks are getting smaller and smaller along the way, that I cannot find another place using cycle theory to get me in. I keep looking for cycle lows, and we keep going from about 3% pullbacks to another 3% here, I think it was. And then up here, most recently, this pullback was like 2%. That's all we're getting here, okay? That we're just completely absent anywhere to add to positions on the way up. And this is what a final blow off top moment looks like. It's a complete lockout rally. There's no sensible places to add. People just go, oh, I can't get in, I can't get in. They start throwing their money into it. And that is what drives the blow off top, right? So, I mean, we're already fully in this like last moment, and this is just not sustainable well into next year. It's just not how it works, right? I just make the case that, you know, we got to squeeze a little bit higher and then tumble spectacularly. If we continue on this current trend angle, by the way, okay, price is going to be around 7,800 by the end of this year. I mean, I just don't see it continuing much past that, but time will tell as always. And again, if we just zoom out a little bit here on this chart, look where the next 4-year cycle low is, okay? Like, it's not that far away in terms of time. And something else that's worth noting, okay, is the bear markets tend to get shorter and shorter these days because of the financial response, right? Because of the way they bazooka money at everything. So it's entirely possible that this is going to end up being shifted slightly to the left-hand side and turning up slightly earlier. Time will tell, right? Time will tell. But for now, long and strong, we're in a blow-off top. The move is extremely explosive. There's never been a time in my entire career where I haven't been able to get in on cycle lows. This is the first time in my entire career that this is happening. And that's because this is extremely and extraordinarily parabolic and unique price action. You will not be able to find another place on the entire S&P 500 chart where we did this. The only time we got close to this was out of the C19 low. But even that, as I was showing with members or on the live stream the other day, okay, even this, look, it produced whopping great pullbacks, right? Relatively speaking, 6.6%, very easy to identify for a cycle low. Same deal here, right? 8.5%. What about this one here? Somewhere around the 10% range. You can see this one here, nearly 5%, okay? This one right here, nearly 6%. You get the point, okay? And this was extremely vertical and bananas and blow off toppy, driven by 6 trillion of stimulus, okay? This at the time was absolutely bananas. It's hard to describe as a stock trader just how nuts this was and unique this was at the time. I know if you're a crypto guy, this is like normal stuff to you, but for the S&P 500 to rally like this was absolutely mind-boggling back then. And at the hard right edge, this is even more bananas, and we've done it on no stimulus at all. We're still doing quantitative tightening. We've still got overly restrictive interest rates, and that is because this is likely the final leg to the upside. So absolutely insano berserko mode here. Enjoying the gains for sure, but just being hyper aware that when this trend line violates, okay, it's probably going to look extremely violent to the downside. Same deal with gold, right? Happily letting this thing run, happily pushing more and more trades, happily keeping our minor exposure here, but also starting to expect we're going to get volatility increase into the top and then some whopping great nasty corrections. That makes total sense, especially with things like Newmont doing this. I mean, look how sustainable this is. Probably not for much longer, I would think. Okay, I mean, this is just straight up now. Running the prior all-time high, probably going to violate pretty soon, I would think. Okay, so eyes on the prize there. And of course, Bitcoin trading happily above 120k at the time of recording. Still going with our original count, still grateful to the indicator for letting us know the momentum was there ahead of everyone else. Fully confirmed with the trendline break, and off we go to all-time highs now, okay? Ready to take some profit and go and live the next chapter of our lives, I think. Unfortunately, lots of people are going to get caught bag holding here and pushing into next year, but that's just the way it works. Last cycle, it was all super cycle, bro, okay? And this time around, it's no more 4-year cycle, bro, but they're the exact same thing. Anyway, we each get to choose. That's the beauty of markets. I just wanted to quickly take a look at the 10-year yield, and surprise, surprise, rejection at resistance, now breaking down. So once again, we sit here and say, tell that to the bond market. I'm your boy Camel. Have a fantastic weekend, and until next time, all the best from me. Cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel